It's time for the big three. Three stocks, three charts, three trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Sarge, Stephen Guilfoyle. And we are so happy that you are with us today. Thank you for being here. So I know you have three names today, Nvidia, Amazon, and Cisco. But first, Sarge, just can you give us your big picture on how you're feeling about the market?
Well, I mean, we're moving the ball in the right direction right now. Of course, that could all blow up tomorrow with the unemployment rate and the non-farm payrolls. But I'm less timid going into September than I usually am. I'm probably still going to build up a little bit of a cash position for this weekend, just because I don't want to go into a three-day weekend with a lot of exposure. But as far as September goes, over the last 25 Septembers, the average, the median loss, the mean loss, it's an average. And the average loss for the S&P 500 has been 3.4%. If you take out 2001 for obvious reasons, it's only 2.4%. So you have to be a little bit prepared for a hiccup here in September, but I'm not expecting disaster, okay? October, although we've had some wildly volatile Octobers, they were a long time ago. And November, we usually get about a 5% pop. So I'm going into the end of the year feeling a little bit better than I was earlier in the year when I really should have been much more aggressively buying stock. But that said, as you'll see with the names I'm giving you today, the trend in a number of names has been very strong. And it's been generally a very good 8 months now.
Understood. It really has. And you could say thank you, Nvidia. I know you're looking at Nvidia today, and even this week it had another jump and run. I mean, tell us about this name. This is a name that you'll be trading today. Your thoughts?
Oh, yeah. No, Nvidia has actually fed my family this year. I'm up 244% in the name. So it's been good. It's been very hard not to sell it. I've been selling it along the way a little bit, but it's been very hard to hang on to the shares because it tops all my target prices. But this name reported on August 23rd. You've all heard the headlines. Sales growth of 101%. Cost of sales up only 6.7%. Operating expenses up only 10%. But then the other numbers that you haven't really listened to are just gaudy. Net income up 843%. Adjusted gross margin popped from 43.5% all the way up to 71.2%. Operating cash flow up 399%. Free cash flow up 634%. Data center revenues up 171%. Gaming revenues finally returned to the plus side, up 22%. Jensen Huang has been speaking regularly about this moat he's built into the architecture that protects the stock from, let's say, the advances of advanced micro devices or Marvell technology as they play catch up. So once these firms dig in with NVIDIA equipment, they're going to have a hard time switching out once this equipment becomes cheaper, because he's building such a moat where you almost have to start from scratch if you go to somebody else once those GPUs become available. So NVIDIA's done a great job. You'll see when you look at the chart that really from last September on up, it's been almost not a straight line, but it's been a pretty good diagonal line right across the chart to the upper right. Though there is an unfilled gap in the middle 300s, which I'm going to try to ignore as I move forward. Right now, you can see the momentum, and NVIDIA is really the story is NVIDIA is the only one getting paid, as I just mentioned. My target price for the stock is $576. The pivot is $480, which was the August high. I add down to the 50-day simple moving average, which is $445, and I panic where I will sell some is if we lose that 50-day line, which is $445.
So at this point, and you had 576 as the target, and I'll tell you, Dan Ives has been hot on this one. He was talking about even a bull case of 600, so he still saw upside potential. Ben, what are your thoughts on this stock today?
Well, you know, Sarge mentioned that we've been moving the ball in the right direction or headed in the right direction. And definitely NVIDIA has taken the ball and run with it, right, in many ways. And Sarge, a wise trader, once told me there's nothing wrong with taking profits on the way up. And, well, NVIDIA has been, as you can see in the chart, doing just that on the way up, to say the least. A very well-defined trend environment to the upside. You can see we're talking about a bottom left corner all the way up to this top right, recently into a high up around 520. You can see we were down around, what was that, 262 back in the end of April, beginning of May. And here it is again, a very well-defined trend environment along the way up. I went ahead and identified some of the areas of consolidation that you should be looking at because they're basically a footprint that the market provides us, kind of that path along the way up. And I also notice here that just recently into the middle of August, how we broke out to the upside, right, and up into that 520 level. But since you can see, we've been a little bit more overlapping and a bit more rotational, and this as well, as you can see, hanging out right around this 480 level. So you can see as long as we hold up above 440, currently balancing around 480, that working assumption that value continues to form at higher and higher levels continues to be a valid one. So let's step away from the hourly candles here. Again, we're going back to the move up we've seen basically through 300 up to that 520 level since May. I want to show you this plays out over the longer term chart here as well. In this instance, we're going back to the beginning of the year around 138. Sarge mentioned he's up 200+% on this stock. It's done very well for the longs. Now, again, breaking out recently, balancing up here at this upper level, but take a look at where we are relative to the 50, the 200-day moving average. Again, reflection of what we've seen in terms of the broader market strength. And this one tied to AI. Obviously, you'd expect to see this a reflection thereof. One thing that has me a little bit concerned is that look at the price activity recently, again, up to that 502. I might have said 520 a second ago. I meant to say 502, but RSI didn't really show or exhibit the same strength to the upside, the same enthusiasm. So Sarge might be right on unloading some of these on the way up. Again, just pointing to some of the strength we've seen here on multiple time frames and how we're holding up near highs for the year.
Yeah, and that's the whole thing. I mean, knowing when to take some money off the table, and then, of course, you almost feel like you want to, kick yourself when you see it going higher, but you still made money along the way. All right, let's get to Amazon. This has been one of the Magnificent Seven, a name that has done well. Tell me a little bit about Amazon, Sarge.
All right, Amazon. Now, this is different. I told you I was up hundreds of percents in Nvidia. Amazon, I'm a Johnny-come-lately. I'm only up like 3% in this name. So it means I answered recently. They reported August 3rd. They crushed top and bottom line expectations. Guidance for the current quarter was for revenue of $138 billion to $143 billion, which pulled the midpoint above the consensus. Q3 operating income is expected to post between $5.5 billion and $8.5 billion. They nearly doubled their operating cash flow sequentially last quarter and nearly doubled their operating cash flow year over year as well. Free cash flow has returned to positive territory. Debt is starting to come down, and the balance sheet, while certainly nothing to brag about, because I've been harping on their balance sheet for a while, is starting to show improvement. When you go to the charts, you're going to see a tremendous fall from late 2021 down to just about New Year's this year. And then you'll see this trend that took over at the start of the year. The stock has really recently, bounced off its 50-day simple moving average from the upside on 5 different occasions just in August. That gives me that's really the reason what provoked me why I wanted to buy the stock here and now. You'll see relative strength in the MACD are starting to look a little better than they have been. My target price is $165. My pivot is 144, which was the August high. My add is right here because I added it only a couple of dollars below here. And my panic is a failure to hold the 50-day simple moving average, which is currently, I wrote $132, but I think that's wrong. If you could tell me, Ben, what the 50-day simple moving average is, because my chart is slow here.
Yeah, on Amazon, I have it here.
On the charts anyway.
Right around 132, Sarge.
There you go.
Yeah, it is 132. Okay, good. Yeah. All right. So that's my panic.
All right. Got it. Ben?
Well, I was noticing the move up that we've seen on the more intraday time frame, the well-defined trend that's been playing out. Sarge, I'm not surprised to hear that you're a little bit late to this one because as I look at the bigger picture charts as well here, I'm noticing that this one took a little while to invalidate that longer-term trend. But let's begin with the short-term, more intermediate. I've got a 4-hour candle chart up here, and we're going back to the beginning of May. You can see, again, areas of consolidation that formed at higher and higher levels. So, again, talking about shares of AMZN and this trend to the upside here, simply put, recently up to 143. You can see a bit of a pullback here right to the 131 level. And you might look at this and say, okay, well, these actually 2 tests of that area did take it out. That's not necessarily a line in the sand. It's an area that we look at, again, the middle of the range that we had formed. And in this instance, we're talking about throughout most of the month of June into the end of July. So that 131, again, most significant is the limited amount amount of time that we spent at that area, or, and again, limited ability to take out the key area and get below it with anything significant. So 131 held the way I see it. I wanted to show you what I was talking about in terms of Sarge mentioned he was a little bit late to join in on this one, and I can understand why, because he also was talking about that longer-term downtrend. Here you can see that's most apparent on this chart, top left to bottom right. Again, a bit of a reverse head and shoulders pattern forming here in the beginning of this year. See the rally off that lower level, but for me, what I see here is a migration of value to the downside. 123 was significant while we were balancing around 100, coming off those lows for the year, consolidating down here. But see how we took out 123, and this is when, again, I think a lot of the bulls started to get excited about this one again, because it did invalidate that longer-term trend to the downside. So this methodology in terms of identifying these areas of consolidation not only helps us see trend and identify it, but also identify when trend is no longer present, because those areas that were established, the key areas established on the way down, get taken out. Sarge was talking about the 50-day moving average. Here it is, the blue line. Sarge, again, right around 132. We're just off it, off that high, I should say, of 143, and just above that 50-day moving average right now. RSI is kind of limited in terms of anything to get excited about here, but well-defined trend up off those lows from earlier this year.
All right, and so we'll leave it there. As you said, you've gotten into this one a little more recently, Sarge, so you missed the big run, but have opportunity. Last but not least, Cisco Systems that hit a 52-week high just lately. So what are your thoughts there on that name?
All right, Cisco Systems reported on August 17th. I've been in this name a little longer. I'm up about 20% on this one. Chuck Roberts has been doing a spectacular job of transitioning this firm from its hardware past into its future. They beat the street's expectations on both the top and bottom lines this past quarter. Operating cash flows were up 62% to $6 billion. Software revenue up 17%. Software subscription revenue up 20%. Current quarter guidance were for revenues of about 14.5 to 14.7 billion, which was what the street expected. But adjusted EPS is looking at $1.02 to $1.04. The street was looking for 99 cents. Full year guidance for adjusted EPS, they have it 401 to 408. The street was down about $4 for that. So they're guiding their margins higher, basically. If you go to the chart, you're going to see that there was a cup and handle pattern that formed last spring from early April into June. And that led to a breakout, which fits, I don't know if you have it on your gadget there, Ben, but it fits my Andrews pitchfork model almost perfectly from the low point in May out into the present. So I believe that if it can hold the lower trend line on that pitchfork and move towards the central trend line, that's my thinking here behind this position right now. My target price is $64. My pivot was $52, which is the right side of the cup. My potential second pivot is $60, which is the central trend line of the pitchfork. My add is down to the 21-day EMA, which is $55. My panic would be a loss of the 50-day SMA, which is $53. Note that if the second pivot is taken, that would trigger a target change for me from $64 to $69.
This. I love all of those caveats and every single point that you're bringing up, Ben.
Well, if you love that, Nicole, you're going to love the chart because it feeds right into what Sarge was talking about in terms of the bullish fundamentals here. And he did point out some key levels that I'm going to suggest we keep an eye on as well here. Let's dive into the chart. First and foremost, I've got a more intermediate time frame here. We're looking at hourly candles going back to the beginning of May. You can see the low in reaction to earnings in the middle of that month, which was around 45, and then off to the races since. I've got a very well-defined trend here. We're going back to, again, from 45 all the way up to this high around 57. You can see, as I like to identify, and it's clearly defined here, bottom left to top right. It went and showed some of the areas of consolidation, the areas where the market has stopped and paused and kind of regained composure. And we always look for retracement. In this instance, it has been very limited. As you can see, you can also see how we're in a vertical phase out of balance here right now, where the market's actually seeking a new area of value at a higher level. So this is just what the bulls wanted to see, right? As we were balancing around this 55 level, they're referencing the 53 level. We don't take it out with any significance. And now we're in that phase that they're looking for. We're seeing higher highs and higher lows. This is high conviction with energy. We're looking for follow through into the end of the week, into next week. And then eventually we're looking for a new area of consolidation to form at a higher level, right? We'll see if we get that, or if we get a V top and just work our way back into this range here. But either way, this is all very bullish, and so is this. Taking a look at the longer term time frame frame, this chart, and I just went ahead with a fat crayon, kind of drew some of the areas of consolidation since the beginning of the year. We're talking about 49 stands out, 53-ish. It was kind of hard to map this out, whether it was really one or two, 51 and 53, but you can see, again, a very bullish trend. You can also see the high conviction associated with this vertical move to the upside. Let me just show you where we are in terms of bigger picture daily candles here, and look at the 50, the 200-day moving average. Look at Cisco just taking off here, a reflection of what we've seen in terms of the broader market. Optimism associated with strength in AI, tech in general. Nicole, this one is to the moon here right now. If higher here today, we're looking like 5 days in a row to the upside.
All right. Thank you both so much for the big three today. Always so exciting. Appreciate it very, very much. Sarge, Stephen Guilfoyle, Sarge 986, and our own Ben Lichtenstein, thank you.